Now that you've hired a COSEC, they should be able to ensure your compliance for this season that comes around every year. That's right, tax season. Categories of taxes in Malaysia. There are two main kinds of taxes in Malaysia, which are direct and indirect tax. A direct tax is charged on a company's income and wealth and is paid directly to the government, managed by the LHDN. The main tax that applies to tax residents for Malaysian Sembilan Berhads and Berhads is the corporate tax. The current corporate tax rate in Malaysia is 24%. Essentially, businesses are taxed on all income received from Malaysia, including profits from dividends, interest, royalties, and real estate, or other similar earnings. Meanwhile, indirect tax is charged to a person who consumes the goods and services. You may best know this as the SST. It is paid indirectly to the government, regulated by the Royal Malaysian Customs Department, or RMCD. The Sales and Service Tax Act is a single-stage tax that came into effect on September 1st, 2018. Sales tax is charged on taxable goods that are manufactured in or imported into Malaysia. Manufactured goods exported would not be subject to a sales tax. Service tax, however, is charged on taxable services provided in Malaysia and imported services. They include food and beverages, digital services, betting and gaming, hotels, and many more. You can find them in this list here. How to calculate each one. Corporate tax. Tax calculation starts with the income statement of your company that has been prepared and audited. If your company has an income below 2.5 million ringgit per year, you are considered as an SME, and SMEs get some leeway when it comes to paying taxes in Malaysia, such as certain tax incentives. SMEs are taxed at 17% on the first 500,000 ringgit worth of taxable income earned, and at 24% on subsequent earnings, no matter how old your business is. The basic breakdown goes like this. Net profit for the basis period, aka your financial year, minus deductions, minus allowances, plus statutory income, minus donations, and that equals your chargeable income. As mentioned earlier, the usual percentage of income tax for a company is 24%, but for SMEs, until you reach your first 500,000 ringgit in revenue, it's 17%. So that means you will take your chargeable income times 17%, and that equals to the total corporate tax you will pay. SST. Different industries have to pay different types of sales and service taxes. The tax rate for sales tax is either 5 or 10%, while service tax is 6%. When do you need to pay? Corporate taxes. You're given 7 months to file and pay your tax returns after your financial period. Say your financial year is the 1st of January to the 31st of December 2019. Your tax return deadline is the 30th of July 2020. So if you overpaid, you can get it refunded or turn it into tax credit. If you underpaid, this is the time to top it up. CP 204. Every company needs to determine and submit a prescribed form called Form CP 204. Basically, it's like an installment for corporate tax. Every month, you're supposed to estimate how much taxes your company has to pay that makes up the total amount of corporate tax for your fiscal year. But SMEs don't have to do this for the first 2 years. If you miss your deadline, which is on the 15th of each month, you'll have to pay a fine. If the difference between how much you pay and how much you're supposed to pay exceeds 30%, then you'll have to pay a fine. But there's no harm in overpaying. If your estimation is off and you want to change that figure, you can do that every 6th and 9th month of the basis period. SST. Every business owner is required to submit a tax return to the RMCD every 2 months from the last due date. Usually for companies that don't receive upfront payments, you're allowed to wait until your client pays you back before paying SST for the next payable month. But say your client isn't paying you back for whatever reason. You have a maximum of 1 year from issuing the invoice to pay the SST, even if you haven't received the money yet. There are also exemptions where SST is not charged if both the client and the service company are registered under the same business type. Payment of SST can be made online through the My SST system or manually by check or bank draft. For late submission, the fine is 50,000 ringgit or up to 3 years in prison, or both. Obviously, there's a lot of paperwork involved when it comes to being audited. The basic records and receipts you need to keep are daily, monthly, or yearly sales reports, debtors' aging listings, credit and debit notes, audited financial statements, submission forms, bank statements, as well as contractual agreements and progressive reports. Your records or book of accounts should be preserved for 7 years from the date you issue it. If you don't, you would be fined up to 50,000 ringgit or be in prison for up to 3 years, or both. This process can be pretty complicated, and it's a good idea to hire a tax agent, an auditor, and an accountant to make sure that you're compliant with everything, because you could find yourself paying more taxes and penalties than necessary if you don't get it right. Good luck, and stay tuned for more episodes like these to help you on your entrepreneurship journey.